Hello students, this is the exam review for exam 3. This will open on March 10th at 12:59 a.m. and close at 11:59 p.m. Again, you'll have the one day to take your exam, so it'll be Thursday. The amount of time that you get is 1 hour and 50 minutes for this. Please make sure that you do have your 3x5 card for the formulas. There are 4 this time. So if you have like a sticky note or a 3x5 card, maybe put 2 on the front, 2 on the back, but please again, only the formulas for the 4 ratios. And I'll go over those in a few minutes. I attached to this email are the 2 forms that you will need for the test is for problem 5 and 6. So again, there's going to be a lot of hand grading on my part for this, so please be patient for the grading part. Again, you'll type either right into those documents in Word, or you can print them out right into them and then send them back as a PDF. Again, no JPEG, no pages. Make sure that you just either have a PDF or DOCX. Again, I'm expecting all of you to use your academic integrity, and this includes not using the internet to search for the answers, using notes, demos, anything like that. Do not use your textbook or somebody to coach or assist you or take the test for you. So again, please use your academic integrity and take the test yourself and be honest as you are taking the test. All right, some things to consider as you are taking the test, or some things to study. The review is up in the Canvas, and in Canvas it'll open up so that you can look at that. Again, you are going to have the 4 ratios, and I'll go over those. We'll calculate out LIFO, FIFO, and weighted average. And then you'll also prepare a multi-step income statement and journalize some transactions that we learned in Chapter 5. So I'll be going over those and giving you some examples to study as well. All right, let's start with LIFO, FIFO, and weighted average. In Chapter 6, you had a lot of quick studies and exercises, and then problem 6.1 that did deal with LIFO, FIFO, and weighted average. Now, what I'll do is, just like with all of the different problems and exercises and quick studies that you did, I will give you a list of activities with the beginning inventory, the the sold items, the purchased items, and so on. So you'll use all those same activities for all 3 problems. So remember with FIFO, FIFO is first in, first out. So those are items that have expiration dates. So I'm going to look at 6.1a and go over this one here. So with 6.1a, here's FIFO, and we started out with our beginning inventory, and then we did have a purchase of 50 or 400 units at $55. Add that to our current inventory, and that's going to give us 27,000. Now you had a 400 unit sale, and so again with FIFO, remember we're going down the ladder, so we're going to get rid of the oldest of our inventory first. So we'll get rid of the 100 units at $50, and then 320 units at the $55, and then you'll have left there 80 units at 55. And then again, you do have another purchase, and then another purchase, and then you have your other sale here of 160 units with that one. So with this one, again, you're going to get rid of 80 of your 55 and then 80 of your 60 units left. And then you'll calculate out your ending inventory. A couple things to remember with all 3 methods is to please make sure that you do have your ending inventory. I need that number. So a lot of students, they get real excited here because they're done. Make sure you calculate that out. And then also you need your cost of goods sold. So you add up everything that you sold, and that's your cost of goods sold. With our FIFO, last in, first out. So the most recent purchase is what we want to get rid of first. Again, those are the most expensive. So if they were all desks, for example, the same exact desk, and we purchase them all at different times at different prices, then we can go ahead and we can sell our most expensive desk first, even though they look exactly the same. So with the LIFO problem here, we did start out exactly the same, and you'll notice again that it does keep the same tone here, the same answers with FIFO as it does LIFO until we get to the sale. So you have your 400 units at 55, we're at 27,000. Then we sold 420 units, so we get rid of all of our 400 units at 55, and then we have 80 left, or 20 at 50, we have 80 left at 50. And again, then we have our two purchases, and then we have the other sale here of 160 units, so we get rid of the 80 at, or the 200 at 62 because we're going up the ladder. And then you have left that little bit there. You have left your 80 at 50, 120 at 60, and then you had 40 at 62 left. Again, add up all of your cost of goods sold so you get that ending number, and then make sure you calculate out ending inventory at the bottom, or the side there. Weighted average. Remember with weighted average that you could have dollars and cents. Make sure you use your rounding rules, and that you will also have only two numbers past the decimal. I'll let you be off a penny or so, but no more than that, because that's not an accurate number. So again, with this one, we have the beginning inventory, and then we have the purchase of 400 units at 55. So the amount here is still at 27,000, but then when you go to average it out, you come up with $54. Now, to average it, take your total inventory and divide it by your total units. Don't add up the unit price and divide it by 2. So in this case, you would divide by 500 units, and that's how you get your 54. So again, the total amount of your inventory, and I'm sorry, I'm not sure I'm getting this in the camera right. So you got your total 27,000 here divided by your 500 units, and that gives you the $54. Then we had our sale of 420 units at 54. Use your new average cost. That leaves us 54 or 80 units at 54 left in inventory for a total of $4,320. We made a purchase, so we add that to what we already have, and then that gives us a new amount of $57.50, and then, or 60, sorry, $57.60. And then we purchased another 200 units at $62. We put that with what we already have. Again, add up your total, divide by your total units here of 400, and then that gives us a new total of $59.80. We sold 160 units. That's going to be at the $59.80, and we have left 240. That gives us an ending inventory of $14,352. You do not have to go through and re-average this one more time. You can just leave it as is. So ending inventory, and then add up your whole cost of goods sold. So that's all you have to do for LIFO, FIFO, and weighted average. Again, I'll give you the same activities for all of those 3 methods, and then you calculate those out. All right, now I'm also going to give you an adjusted trial balance, and you're going to prepare a multi-step income statement. Now with the multi-step income statement, remember that the format is changing, not the title. So you will have the name of the company, income statement, and for the year ended date with the year. I noticed a lot of abbreviating in the last test, and the years were missing. So again, make sure that you put for year ended. It's not month ended, for year ended, and the actual date with a current year if no year is given. Now, when you do your multi-step income statement, you're going to start out with your sales, and then you're going to put in your last year discounts and your sales and allowances, add those together, and you get the amount, subtract that from your sales, and that gives you your net sales. Then you're just going to use, I'm going to give you the cost of goods sold, so just use that amount. You don't have to write the big long 6 lines here that we normally would write. You just have to put the title, cost of goods sold, and the amount from the adjusted trial balance. Then you're going to calculate out your gross profit, take net sales minus cost of goods sold, that gives you your gross profit. Now with your sales, remember we have selling and we have general and administrative expenses. So you're going to have those into 2 different categories. Remember that the items that deal with the selling side, sales salaries, rent for the sales floor, any sale or supplies expense. Those are all going to be for your selling. For your general administrative, that's going to be your office salaries, your office rent, and then it's going to be any office supplies as well, or office supplies expense as well. Now, with that, you have maybe insurance, utilities, advertising. Those three I'll be lenient with if you have those on the test, and then you can put those in the categories that you feel fit. And then again, make sure that you have those in the right categories. So again, your selling expenses, you put those, list those all spelled out, add them all up and get a total selling expense. Then you have your general and administrative. You're going to list those separately, add them up, and put your total over on the far right. Then add up both of your categories, total those up, take your gross profit, subtract your expenses, and that's going to give you your net income. So again, make sure that you are double ruling after the net income and that you do have those expenses into two categories, selling and general and administrative. Again, use your academic honesty. Please do not have any help sheets out during the test, and that includes the income statement. So do that on your own. You've got 5.3b that you can practice with that. We didn't, if you didn't do all the problems, practice with 5.3b. Or again, you can go back if you didn't get 5.3a done and practice with that as well. Now, the other part of the test is going to be journal entries from Chapter 5. So you could see, and it's on the review, when you sell merchandise on account, purchase merchandise on account, any returns of merchandise, when we pay for the merchandise that we purchase, and when we do receive money from our customers. So those are the different transactions that we'll have. Some good things to study. Quick study 5.5. These are the three transactions that deal with your purchasing merchandise on account. When you purchase the merchandise, it's going to be accounts payable and merchandise inventory. I'm sorry, I said that wrong. When you purchase the merchandise, you're going to debit your merchandise inventory and credit your accounts payable. If you have a return, you're going to debit accounts payable and credit merchandise inventory. Then when you pay, watch your terms of the sale. You will have your accounts payable. That will be the debit for the total that you have. So in this case, there was a return. So it's 6,000 minus the 250. And so it's 5750 debit. There was a incentive to pay early. So there was a 2% discount. So that's your merchandise inventory. That will be your credit for 115. And then the difference here is your cash, 5635. So again, a quick study 5.5 is a really good one to look back over those three most common items that we have with purchasing merchandise on account. Now the other one that deals with the sold merchandise, this is to our customers. You will sell merchandise. You could have transactions where the customer returns the merchandise, and then when they actually pay. Again, you need to watch your terms of the sale. So quick study 5.10. Sell merchandise on account. You're going to have accounts receivable and sales. Accounts receivable debit, sales credit. Then you have to record the sale. So you'll have your cost of goods sold debit and your merchandise inventory credit. That comes out of the inventory. Then if we go down here to April 4th, there was a return of merchandise. So you're going to use your sales returns and allowances. That will be your debit. And then accounts receivable credit, because that's going to come off of the amount that they owe. Then that repeated itself, but then on the 11th, there was, they didn't take advantage of the discount here, or there was no terms, I can't remember, but they paid, so we have our cash debit and our accounts receivable credit. Again, there was that return, so you had to take the $3,000 minus the $300, so that's how you come up with your $2,700 for cash. Please remember that when you sell the merchandise on account, that's at the retail price. When you record the merchandise being sold, that's going to be at the wholesale. Okay, so that's a couple things to think about. So again, this is quick study 5.10. All right, so then getting into our four different ratios that we have. We have two from Chapter 5 and we have two from Chapter 6. So for the first one is the acid test ratio. And with the acid test ratio, I'm going to show you exercise 5-21. Now this is going to be your quick assets, which is made up of cash, cash equivalent, short-term investments, and current receivables, divided by current liabilities. And it's telling us if we can cover our current liabilities. Now, in this problem, this is exercise 5-21. You had the three kind of cars, Camaro, GTO, and Torino, and you had to calculate out the current or the acid test ratio. I'm not going to separate these out for you. You will get a total of the quick assets. You're going to divide that by the current liabilities. And remember, you want to be over 1 with that one. So Camaro would be the one that has the best acid test ratio of the three. So again, anything over 1 is good. Anything under 1 does look at some concern that they can't pay their debt. All right, the other one is gross margin ratio for chapter 5. And with the gross margin ratio, that formula is gross profit divided by net sales. So with Quick Study 5-23, you had to calculate out net sales. I will give you net sales, and then you divide that by you subtract out your cost of goods sold, and then you get your gross profit. So gross profit divided by net sales, and in this case, you had the three different, I'm guessing they're HVAC, but you had the 4 different companies here, and then the best one here was York, because they were at 49.4. So the higher that it is, the better that your gross margin is, because that's a bigger percentage of your sales. Again, that ratio is gross profit divided by net sales, and this is Quick Study 5-23. All right, then for your inventory turnover, there was only one problem, and that was with your, excuse me, exercise. I lost it here, just 1 second. So exercise 6-19. Exercise 6-19. Okay, now this is the only problem that we had. So if you did this one, great. Hopefully you checked it with the homework. If you didn't, that's fine. It's here. Okay, so with this inventory turnover, you're taking your gross profit and you're dividing it by your average inventory. Okay, so average inventory. So gross profit, cost of goods sold divided by your average inventory. So in this case, you would take year 1 and year 2, add those together and divide it by 2 to get the average inventory. And then for year 3, you're going to take year 2 and year 3, add those together and divide it by 2. So again, inventory turnover, cost of goods sold divided by your average inventory. If I give you the average inventory, just use it. If I don't, then you'll have to do the average. So for year 2, we came out to 4.7. Year 3 was 7. And that's a times at the end, how many times your inventory buy, sell, buy, sell, buy, sell, okay, turns over. So you want that to be times. Now, with your day sales and inventory, what you're doing here is you're taking your ending inventory for the year and dividing it by your cost of goods sold, and then multiplying it by 365. Again, in business, we use, or in county, we use 365 for our year. Business, they use 360 because they also cover the 5 major holidays. So again, you're taking your ending inventory divided by your cost of goods sold. So for year 2, again, we have our ending inventory divided by our cost of goods sold times 365. And then that was the same for year 3. Don't forget the 365 when you write the formula down for the test. So for year 2 was 75.1 days. Year 3 was 55.2 days. You want the lower number of days because that's the days it's taking to sell the inventory. So year 3, they decreased from 75 to 55 days. And then for your inventory turnover, you want that to be the higher number. So it was year 3 was 7, year 2 was 4.7. So the better year was year 3. So you want higher turnover, lower days, okay? Higher turnover, lower days. So that's really good, okay? Now, that is what's going to be on the test. Again, you get 1 hour and 50 minutes. You're going to have 2 forms that you need to either print out and write on and upload, or you're going to type right into those Word documents. Again, no JPEG, no pages, okay? Make sure you have those. Um, a couple things that I want to remind all of you of, again, is the test is only one day, March 10th, which is Thursday. It'll open at 12 a.m., close at 11:59 p.m. I will have to hand grade quite a bit of that. The international paper is due March 13th. Hopefully you have already signed up for the country of your choice. I sent a Google, or I shared a Google sheet with all of you that you has all the countries, and then you put your name next to your country. Don't add any countries again to the list. Just go ahead and pick one and do one. I think last count 20 of you have already chose your country. The instructions again will be opened up in Canvas in the modules with the review for the exam 3. Follow the directions. Your first paragraph will contain specific information, and then the second part will be the business finance structure, etiquette, what do we do in meetings, greetings, things like that. Please do not put a cover title. You do not have to have a works cited page. It is due on March 13th. It's 25 points, but it's a really nice project for you because a lot of you will be working with international companies, and so you need to know some of these things as you do business with them. After the international paper, which is due on Sunday, March 13th at 11:59, I will not be checking email during spring break. So when you guys do not have any assignments at all during spring break, so you'll have the whole week off. When we start back on March 21st, we have 6 weeks left. Chapter 8 is our bank rec and our petty cash. Chapter 9 is accounts receivable and collecting those accounts receivables that don't pay. Chapter 10 is other assets other than plant assets. And then chapter 11 is payroll. So we are almost to the end, 6 weeks to go after spring break. So I hope all of you have a wonderful spring break. Enjoy, relax, spend some time with your family, or get caught up on things that you've been putting off because of school. But again, please remember I will not be checking email after Sunday. That is the official spring break of the college, is starting the 14th. If you have questions after you've gone through the video here, let me know, and I will talk to all of you again soon. Take care and enjoy this beautiful day. Today is Saturday, March 5th, and it's 3 o'clock, and it's just a beautiful, beautiful day. I think it was 64 degrees. So enjoy this beautiful weather. Thank you.